Hello, everybody. Happy Friday. This is Jim Malone coming to you live on Dallas Trading Floor. Boy, I tell you what, we got slammed today. The Dow, the Nasdaq lost over 3.5% today after Chairman Powell put out the info. And just it looks like interest rates are going to go higher, and of course that means higher commodity prices and. Oh, yeah. So I definitely got slammed on one of them that was doing very, very nicely. But we'll just kind of go through it and commiserate together, I think, today. Yeah. On the overall stock market, the Dow was down 3.3%, which is not good. S&P 500, it was off 3.37%. The Nasdaq at the end of the day was actually down 3.94. So I had a little bit early on telling you that it was down 3.5%, but very significant sell-off. And the Russell, which is the most broad of the indexes, 2,000, of course, stocks in that one, 3.35. So just not a good day at all. Let's take a gander at the S&P 500. And for everybody watching on TikTok, you can jump on over to YouTube at YouTube/trading. But this is the view of the spider, the S&P 500. Excuse me. The spider, of course, is the ETF that covers the 500 largest stocks. Of course, the Nasdaq some of the stocks are in there, but this is the index. It's called the spider, and it's an ETF that tracks that. What happened, of course, is that we went all the way up to the 200-day moving average here, as you can see, and boy, we got some resistance there. We thought we were out of the woods here when we hit that 21-day exponential moving average, but that is not the case. We moved up yesterday and then hit that 10-day line, and then boom, it went right down once again. So the question is, where are we going to see the bottom of the S&P 500? I'm guessing that the next stop on this is at the 50-day line, and currently the 50-day line on the SP line is at 398.59. So we have a little bit of ways to go, about 10 points to go down on that, and I do kind of expect we are probably going to be pulling back next week. Now, hopefully we'll get some support at the 50-day line, but we might not. We may go even lower than that, potentially all the way back down to about 380 on the spider. That would be disappointing, and if that did happen, we would be back in the downward trend. And what I'm going to do here is I'm going to draw the reversal line here to show you kind of what the progress is, or lack thereof, on the. We were moving above that red line. We hit the 200-day moving average. Boom. And this is in a cup with handle, but my guess is it's going to be a pullback, and it's going to come back down a little bit below 400, and then it possibly could turn up. But we will see. Based on that. So hopefully that indeed is the case for what's going to happen on the spider. I kind of wanted to bring up some things that you might be very, very interested in. Of course, you're not going to be able to talk, but if you do go to YouTube, which is at youtube.com/Dallas Trading Floor, you'll be able to see all these charts. Or what you can do alternatively is just go up to my profile, click on the link, and I have a live feed for the YouTube feed. So what I wanted to show you on this one, there is a strong outlook for natural gas, and it's really due to the fact that so much of the electricity is generated in natural gas, and this is true in Europe as well. Europe does not really have a good source of natural gas, but as you can see, the French and German power prices are just going up like record pace. They're up tremendously. Now, I think that they're going to have to step in and do brownouts this winter, but it can be very severe because, of course, as you know, many of the coal-fired plants are closed. Now, they're trying to reopen those, and they may be able to do that to make electricity. A lot of people in Austria and Italy use have cut back on that tremendously in Germany. And so they're going to be a very, very cold winter this winter. That's why I'm guessing that we should see a interesting play. Now, what I did here is I started a new position in a company called Comstock Resources. And interestingly enough, this is based here in the Dallas area. It's based in Frisco. And Jerry Jones, who owns the Cowboys, basically, is the primary shareholder of this, believe it or not. So he's a very rich guy. But as you can see, it's way outperformed basically the natural gas price. The lower line here is the price of natural gas, and as you can see, it's definitely headed up. So because of the inflation, we're going to see a lot of movement in the commodities, that being oil, natural gas, and some of the other ones, and some of the other products that are related to that, fertilizer being chief amongst them. So here's kind of what's going on with that. I do believe that there's a good opportunity here with Comstock Resources. It's CRK, I think. No, CKR. Is that right? I have to look at this carefully. CRK. Yeah. There we go. So what I'm going to do is CRK. Put that up here. Hopefully, yeah, there we go. Comstock Resources. So I'm going to switch back over so you can see this on TikTok, what I'm talking about here. This is Comstock Resources. I did make a buy today, and in a down market, this one's going up. So it's always interesting to buy something that's moving against the trend, and that's definitely the case here with Comstock Resources. This is a 9 that makes it in the top 1% of all stock currently being traded right now in this market, and it's come up through this very, very deep cup base up to close to its all-time high of 22.11. It's relatively inexpensive stock. Closed today at $20.32. So, kind of interesting share there. But we have this relative strength line. It's gaining relative strength against the market, and that's one of the reasons why I think that you might want to put it on your radar screen. The checklist on this one's 100%, so you can't get any better than that in terms of the. A little bit of issues here. Sometimes I don't know why, but it cuts off the. So see if I can get back. Won't let me. Hold on. Hopefully I can get my connection back here. Well, you'll hear my voice, and you won't hear my ugly. You won't see my ugly mug. For some reason, I'm having issues with the camera. It's not allowing me to do that. So let's see if I can change the settings here. Quick. And we have lost a connection with the camera. So interesting. Interesting. So let's see if I can try to do a kind of as we're going. Let's see if we get connection here now from the camera. We should have good audio, but for some reason the camera, not so much. So it's somehow, and I don't know why this is the case, but it has lost connection with the camera. So that's you'll just have to see the avatar for right now. All right, and that's kind of unfortunate. So, anyways, that's Comstock Resources. So, without further ado, let's get into some of the questions from everybody. Thank you so much. And take a look. Stocks in a positive today. 5 stocks, yeah, definitely. We definitely have some that are doing okay. For the most part, not. For the most part, we're not doing well today. The day was not a good day for the market. But I wanted to show you some of the options. There we go. Maybe we can hold on one second. Let's going to leave the studio. Let's see if we can. Okay, well, you get to see this like this. Boy, this is not fun when it doesn't work. All right. Slides back up. There we go. All right, so I don't have a camera right now, but we have a phone call that we don't want to take either. So it's just giving us trouble. All right, let's look at DQ real quick here. This is the Chinese solar play. Again, I've really stayed out of a lot of these Chinese solar plays because of the political situation. Just not a good place to be. It was up today, though, and that might be something that works. Let's see if we can get over to that screen. There we go. All right. So here we go. Here's DQ. This is the solar company. Of course, this depends very, very heavily on tax credits. It's not really that economic, but it does appear on tax credits. So, and the tax credits, if the tax credits pass, that'll be good. They definitely had a very strong movement up today. I wouldn't buy this one. Even though it does have 98 relative strength and it's in one of the top areas, I'd be really careful about buying DQ here. I know that a lot of people do like it, but I'm a little bit leery on this one right now. It does have 98 relative strength, which is superb, but it does have some other issues related to it. So, not necessarily a great place to be in it. There we go. Okay. All right. Let's look at CRC. Probably be a pretty short show today. CRC. See if we can go through that really quick. This is California Resources. I definitely like this one better. This, of course, is oil and gas that's actually based in California, which is kind of an unusual thing because they've told everybody that they're not going to allow any gas cars by 2035, which I don't know. I'm a native Californian. I don't know if that's going to work or not. Maybe it will. Doesn't appear that it's going to, but this one is doing well. Of course, this is an oil and gas play in California, so definitely something that is looking pretty good. It came right up to the buy point 50.21. Let's look and see how it is in terms of the relative strength. It basically 98 on the checklist, so looking very, very strong in terms of that checklist, and looking very, very good on that right now. So I could do this as a buy. All right, so let's get to a few of the other things here. Kind of show you what I currently own. As you can see, a lot of red there. I wish I wasn't didn't have so much red. These are the stocks that I own long. Cheniere, that was down today. I did see a little bit of movement up on Petrobras PBR. That's a interesting stock. So let's see if we can put that up for people on TikTok. PBR. This one did move in the right direction. This is the Brazilian National Oil Company, and they are doing well. They're going to do well in this kind of environment. As you can see, 98 relative strength, and it is making a new high. So that is off a little bit in after hours, but pretty good. As you can see, I started right before right with the handle right before the pivot at 12:38. So that's kind of been the way. We had a very, very significant. Dividend here that I wanted to show you. So if we go over to the weekly, we can kind of see this. And let me see if I can shift it over there so you can actually see what I'm talking about here. And this is in the lower the lower half here. But as you can see, we had 48% increase in sales, 111% increase in profit. So this is one that definitely we can definitely look at. Only 9% of this is funds, believe it or not. But the cash flow on this one, this has a PE ratio of 2. So that makes this PBR one of the lowest PE stocks out there. And normally that's not a good thing, but in this inflationary market, it seems as if that makes sense. So that's kind of where that's at. All right, let's see. Can you take a look at Target? For me, please. The chart looks bad. I think you're probably right. Let's let's look at Target. Let's look at let's look at the let's look at the Target chart. Of course, that's the symbol on that was TGT. That's Target, and unfortunately, this is a bellwether of the economy in general. So, if Target is not doing well, it doesn't look like it is, then the rest of the economy can be very problematic. And so we got to be very, very careful in this kind of a market. So we do have a downward trend on Target. The relative strength on this one is 24, just not working out. This is one of the reasons I switched away from the big discounters to the smaller ones. And I want to kind of compare for you, where I'm at in terms of the market so that you can get a look at that. This is the chart of Target. As you can see, it's pulled way down. But if we put in Ollie in there, this is Ollie's Bargain Warehouse, and I do have this one, believe it or not. You can see it's done a little bit better than Target. Now, it's in a downward trend too, so not necessarily the place to be. Now, also, I own BJ's, and I don't know how well this one's going to do. I just bought this. But that one seems to be doing better than all of them. So if you're looking for a retailer, and I may be getting rid of Ollie, this is probably the one that you want to be in. It's BJ's Wholesale Warehouse, and I'm going to put that up here. BJ is the symbol, of course, on that one. And that one, I do believe, it's still in the buy zone now, and it's come down to that 21-day line. So BJ's is one that you could probably do very well in. It's up after hours. It's up about 1.3% after hours. So very interesting. Very, very interesting. The fact that in such a down day, we're doing very, very well here. So my take on Target is I don't think it's the right place to be right now in the market, unfortunately. And so it's just one of those. It's just one of those things. That's interesting. Thank you, Charles. Your take on oil in the next 2 to 4 weeks. Very, very good. Well, here's what I think in oil. Now, I think that the play really is in gas. I think the play is in gas more than oil. But let's take a look at the XLE. Let's take a look at the trend on the XLE. That's, of course, the Spider Select that covers oil and gas. And the trend is up, believe it or not, even after today. It's up, down a little bit today, but the trend is up here. Now, the thing about the XLE is the XLE is mostly Exxon and Chevron. Now, if we look at, if we compare that to Range Resources, RRC, that's one that I do own as well. That gives us a little bit of an idea. And I do think that the trend, as you can see, is up on both of those. So I think in the next 2 weeks, we're looking at 2 to 4 weeks. I think we're looking at a trend moving up on oil. I really believe that. I really believe that. But there's a way that we can take a look. There's a way that the XLE is definitely a safe play here. But if you want a little bit more exposure, go to something like RRC or possibly Petrobras PBR. And you can see that's not quite as good as RRC. And then the one I added today, of course, that's CRK, which is Comstock Resources. So that kind of gives you. Did it come in there? Let's see if it did. CRK. So these are currently, I have 3 of these. Let's see. Yeah, there we go. So CRK is the outlying. This is an oil and gas stock. CRK is the outlier, and I think this is the one you probably want to concentrate on. I just started building a position. As you can see, it's outperforming the XLE, the PBR, which is the Brazilian National Oil Company, Range Resources. The reason for this is mostly gas, and gas is what is winning the day, it seems like right now. So this is the one I think that I like. Now, it's not actually in a great buying position, but looking at the comparison here, this is the one I chose. Why? Because this one is moving up at a steeper angle. As you can see, basically in the last 2 months, it's moved up. It's almost doubled in the last 2 months. CRK. So if we go over here to CRK, let's look at it. CRK. Comstock Resources again. Yep, there we go. Comstock Resources. You notice I made a buy right there. Now, the all-time high is right here at 22.11, so it's right about there. Now, this may pull back a little bit, so be careful. This is not a actual. This is not a total buy point, but this is a cut base. We're looking at probably for it to pull back and then continue up above that high, which is 22.11. Now let's look at the checklist on this. It's got a 100% checklist, so that's definitely something that is worthwhile looking at. And remember, this one is CRK, and it's let me put that up there for everybody. This one is CRK, or Comstock Resources. CRK. And part of the reason I'm bullish on this one is because we are there's a lot of demand for gas. This is a gas player primarily, more gas, less oil kind of play. And I do think that with the new facilities, facilities in Sabine Pass, Louisiana, and Corpus Christi, Texas, with Cheniere, they'll be able to liquefy this and sell this in Europe, the gas. So I do expect natural gas to move up significantly. One thing I would like to kind of show you in terms of where we're at there is to take a look at Comstock Resources and then compare it against the price for natural gas, the underlying price for nat gas. Which is very volatile, but it kind of gives you an idea. CRK has of course the same shape in terms of the chart as the overall price of natural gas, but if you'll notice, it's accelerating at a higher rate. So I expect natural gas to go up into the winter. That's typically what happens, and Comstock Resources may be in a position to take advantage of that. So that's one of the reasons why I am looking significantly at some of the gas plays, some of the gas plays. So thank you for that very much. All right, there we go. Hey, absolutely. You are absolutely right. Thank you very, very much for that, by the way. And, I probably should have jumped on it. I was waiting for it to form more of a base. I probably should have jumped on it earlier this week, but you're absolutely right. I think you're really, really absolutely right on that. So, really, really good. The soft landing nuts is what caused it today. Yeah, I think so. Go down. Right. I know. It's so amazing. Unfortunately, we're going to have some more pain here, but we can do well with the stuff out there, and Comstock is definitely in there. So thank you for that so much. RGJ, please. I lose a lot. Oh shoot! I'm so sorry to hear that. Stock price, and it's possible to come back tomorrow. 77. Okay, let's take a look at that RGCL for Sonal. Let's look at RGCL. This is why you just have to put in those hard stops. This is one of the hardest things to learn. One of the hardest things I had to learn. That's for sure. In the market is to put in those hard stops, because sometimes you have a tremendous gain and then boom, you're just stuck, and you want to take your emotion out of it as much as possible. So the most important thing is I always put in. I know that people tell you don't do this. No, I just don't put in the hard stops. I want to see how it trades, but every time I do that, I lose. So my thing is to put in hard stops, 7% down from where you bought it, and that's what I do. And let me see if I can get this. See if I can can get this. All right, what did you say? I can't remember. All right. Yeah, no, you definitely were. I think it was Tuesday though that you mentioned Comstock. I think you did, but yeah, but it was great. It was great. ACLS, please. Let's see. ACLS. Oh, yeah, XLS. This is the one that I got stopped out of today, and as you can see, part of the reason what I do here is that I put in hard stops. I put in hard stops. The first I was stopped out about 78. See if I can put my 1 minute chart up here. Yeah, as you can see, this is really bad. But I did put in hard stops. I had a hard stop here, and then I did have a hard stop here, and I got completely sold out of the position. I probably should note these better, but that was see that stop right there. That was definitely a stop, and I sold it half of it before noon as it was really weakening, and then I'm glad I had this stop in here, and that got me out there. So if you play with stops, that's the way to do it. Try to do it with stops. I mean, this is tough to learn. I think it's definitely possible to recover to 78, and and I definitely think it is possible to recover to 78 here. So this was a sell-off. I mean, this is a large person coming in. What I'm going to do here, probably on Monday, is I'm going to rebuy this. I know this sounds weird, but I'm probably going to rebuy this if it comes down to the 21-day line. So let me put that up there for everybody. Oh, let's put up the 21-day line and show you kind of what I'm talking about here. This thing called technical. You see the 21-day line right here is at 71.77. So this is where I think it's going to bounce. That's my guess, and that's my guess is where it's going to bounce. So even though I did sell out with stops, and this is one thing you always want to do, at the very minimum, when you buy anything, you want to make sure, do a quick calculation and set your stop. And the way I do it, and typically is, is just try not to let the stock move against you more than 7% from your buy price. So when you buy the stock initially, you should do the calculation. Just get the calculator out, do the calculation, and then that will allow you to know where to set that stop. Now, once you get more used to that, you're going to be it's going to come a little bit more second nature. But what you want to do every time is you want to get into that. You want to set that stop. Now, typically what I do in this market is I set my first stop at 4% below the price for 50% of my shares, and then the rest at 7% below, so that if you do have these pullbacks, you can survive a little bit better. I'll probably be back into the stock, to be honest, because I do think it's going to bounce. It's just one of those things that got it got stopped out. So it's very tough. All right, good question on parts. This is parts.com is a internet reseller of auto parts, and it's kind of been in this decline. Basically since about the November, actually really since last year, about August, and it's just been kind of moving. So it's been in decline essentially for a year here, and it's continuing to move down. Now the question is, what should we be doing? Well, let's look at the kind of the overall look on this. Well, as you can see, it's not done well. I mean, if you started a year ago with $1, you would go down to about 40 cents. But but at least it wasn't Carvana. But it wasn't Carvana. So this business has not done well. The other business is Copart, CPRT. That's done a little bit better. Copart. It's up basically. It's only off 15%. But the parts business, for some reason, not done well right now. If you're down more than 7% on this, I would sell this one. This is in a downward trend. You just don't want to You just don't want to own anything in a downward trend. Also, you got to be very careful. You don't want to buy anything below that 200-day line. And of course, that's the case with car parts. So I think you just want to avoid this one. That's what I would do. I would avoid PRTS. I just would avoid it here. If you're down more than 7%, sell it. Take your cash, and hopefully you can do something else better with it, because I just don't think that's going to work. Unfortunately, it's just not really working. Right, we have a question on Visa, and of course Visa, MasterCard, biggest credit card issuers out there. But also, I want to compare this with PayPal. Just doesn't look good. Again, it's still below the 200-day line. We just don't want to really buy anything below that 200-day line. It's just too dangerous. So this is the chart of Visa. Kind of makes it easier to see here. This is the chart of Visa. We're still coming down on this one. Let's compare this to PayPal. And PayPal isn't doing well either. So I definitely think the payment area is probably not the place to be. PayPal is even underperforming Visa, as you can see. And then let's put a bank in here, like Bank of America. So this just is not the place to be in the market right now. Oops, this is going to be BAC, Bank of America Corp. There we go. So as you can see, Bank of America underperforming Visa, PayPal underperforming them both. So not a good place to be. We don't want to be in this part of the market. We don't want to be in the banks. We don't want to be in the payment area. It just is not working very, very well. We ought to be looking at the parts of the market that are doing well to see what. And this way we can kind of analyze that. We can look at the XLE, which is the Spider Select for energy. And what I'm going to do here is just make this easier to see. This is the XLA, done fairly well. Then we also want to look at, let's look at the finance, the XLF. This is the finance sector of the market. Hopefully I got that right. XLE, XLF. There we go. So if we can see, this is the energy sector of the market versus the financial sector of the market. The financial sector of the market has not done well, whereas the XLE has done well. Now, if we let's put in consumer. So this gives you kind of an idea of where it's at. Now, if we look at the XLT, which I believe is the technology, if I'm not correct, no, XL. Well, anyways, this gives us an idea between energy versus banks. Energy, where you want to be. It's very obvious here, looking at these two things. So we want to be in that. So with Visa, I just think that not a good time. Just not a good time for Visa, unfortunately. Just not a good time for Visa. So I wouldn't be in it. Got into VUZI at $5.99. Pyramid more. Let's look at it. Look for the next. You know what? VUZI. This is I am not a good bottom fisher. I'll have to manufacturers video eye devices. You got in at $5.99. Okay, I would probably pyramid and I would push up my stop loss. Let me kind of take a look at how that's trading here. Well, it's pretty volatile. God, look at that. It's been all the way up here, and now it's. So I don't know. This is a $7 stock. I'd be careful with this one. Why not buy an oil stock instead? Why not buy something like PBR? And I think you're going to get definitely a better bang for your buck. This is PBR. This is the Brazilian National Oil Company, and this is VUZI. So I wouldn't be in VUZI here. I just wouldn't. All right, let's take a look. We're probably coming to the end here pretty quick because I have a camera problem, unfortunately. But let's compare the QQQ with the Spider. Of course, the QQQ is the Nasdaq 100, and let's take a look at that one. See how that's doing? QQQ. And let's compare that to the spider. See what we can do there. SPY. And that is the there we go. So if we're looking at both of these indexes, the spider is definitely doing better than the Nasdaq. There's no question about it. But the question is, how is that comparing to the diamond? Well, it's about the same as the spider. So here's the thing. The QQQ is doing the worst. Spider and diamond's doing okay. So we don't want to be in technology. That's what that's telling us here, because the QQQ, the Nasdaq 100, is dominated by the technologies. So we don't want to be there. Let's now compare that to the XLE, which is the energy part of the market. Look at that. Isn't that interesting? If we're just buying energy stocks, you can see, at least in the last few months, we would have done a lot better just by buying in the energy sector and skipping technology and banks and financials. You see that? See how that works? So my thing here is that you really want to be. There's only a few sectors of the market that are working right now. One of them, of course, is the oil and gas, and I've been just harping on that. And the other one that was kind of working was semiconductors. It's not working as well today. All right, let's take a look at the IPI, and this one is an agricultural, so that has been doing well. AGCO. Let's look at that real quick. And what I'm going to do here is compare this. This is agricultural tractors. This is actually a European company. I'm not really know a lot about it. I probably would not be a buyer of it because it's below that 200-day line. But let's compare that, and that's a good thing to compare here. Let's compare that with IPI, which I think that is the Israeli IPI. Is that right? I think this is the Israeli. This is Intrepid Potash. These are good ones to compare. These are very good ones to compare. So this is in the right sector. Agriculture has been doing well. But let's look at ICL, which is another one. This is the ICL, not quite as good. Let's look at ICL over here. Against the Israeli producer. This one is all, if you're in the agriculture, is making a move above that 21-day line. It's not quite. It almost reversed. I've been watch listing this one, and this one might be a good bet. I think this one could double in price. It's $10.85 right now per share, and as you can see, it's got a strong checklist. The only thing it's a little bit low off of its all-time high. Needs to move a little bit higher there, but this one could move very nicely if we get more of a harvest problem in the world. And this one is one that you might want to look at. So I'm going to show you. I'm going to compare this to. There we go. This is ICL. This is the Israeli fertilizer producer. Then we could put in there the equipment manufacturer, the agricultural equipment manufacturer, AGCO, and that is, there we go. So that's definitely outperforming. And then we want to put in Intrepid Potash, which is another fertilizer company. That's IPI, and that will give us kind of where it's going. So IPI is very, very good. I mean, it's actually outproducing IGL, which is the Israeli company. So right now, IPI is the one that you want to be in. If you want to be in the agricultural sector, which is showing some very good, is doing well, you probably want to be in IPI, Intrepid Potash. But here's the thing, I probably would not buy Intrepid Potash because it's below that 200-day line. I want to see more strength. I just want to see more strength. See how it's pulled back like that? Not something you really want to see. So out of the two, IPL, I think is the one you want to is the one you want to be in. Let's see if I can get that back. IPL. Okay. No. IPL. So let's see. IPL. Did I get that? There we go. Intrepid Potash. And that's the one. And then IPL. Nope. Well, anyways, the Israeli is probably the one you want. Well, I'm going to wrap it up for tonight, and thank you very much. Hopefully, I'll have my camera back next week. I'm going to see if I can get a different camera because I've had so much trouble with this, and see if we can do that. So I will be back next week at 5 o'clock. Thanks, everybody, so much. I'm sorry I had technical problems today. I've got to get a better camera. There's got to be a solution to this problem. I think it's a problem with the browser. And I may be in the wrong browser here. I don't know. But I will be back tomorrow. I will be back at 5, and I will see you then.